Hello and a warm welcome to Post-Pandemic Future. What next for UK university finances? The latest in Times Higher Education's In Conversation series, brought to you today in partnership with HSBC. I'm Simon Baker, data editor here at THE, and apologies if you're watching me lip reading for that first section. Thanks to everyone for taking the time to register and tune in. For those of you not familiar with the series, we invite a panel of experts to consider a particular issue, which has often been something tied closely to the huge disruption caused by the COVID-19 pandemic. And for universities in the UK, as in many other countries, there probably isn't a more pressing issue right now than how the pandemic is going to affect their bottom line financially over the coming months and years. The issue has been given even greater weight by a report by the Institute for Fiscal Studies this week that has warned that 13 institutions in the UK could face insolvency due to the crisis unless they receive some additional support. To delve much deeper beneath the surface of the issues, I'm delighted to say we have a truly expert panel today. Rachel Hewitt, Director of Policy and Advocacy at the Higher Education Policy Institute, UK's only independent think tank on HE. Rachel has a rich background in dealing with HE data and trends, having held a number of roles at the Higher Education Statistics Agency before joining HEPI. Of course, we have a Vice-Chancellor, namely Alec Cameron of Aston University in Birmingham. An interesting university in many ways for its focus on industry ties, something that may prove vital as the UK charts a way out of economic turmoil. Alec, who has been VC since 2016, also brings a wealth of experience from Australia, where he has held roles including Deputy Vice-Chancellor at the University of Western Australia. We also have Ian Robinson, Head of Public Sector and Education at HSBC UK. A team there that focuses on supporting universities, education groups, local authorities and independent schools. Ian has been with HSBC UK since 2010 and has previously held roles covering retail banking, mid-market enterprises and large corporate banking across the north of England. Next we have Jeanne Harrison, Vice President and Senior Analyst at Moody's Public Sector Europe, where she is responsible for over 20 credit ratings for government-related entities, including universities. Jeanne also writes research to inform investors on key sector trends, which has included some vital updates in recent months. And finally, we have Andrew Connolly, Chief Financial Officer at the University of Exeter, who I'm sure can give us a real flavour of what it's like to be a CFO at this time. He's been CFO at Exeter since 2013 and previously was Director of Finance at the University of Essex for 10 years. Hello everyone, and thanks again for taking part in the discussion today. However, before we get on to the discussion, I just wanted to quickly set the scene with a few slides that illustrate the challenge facing universities in the UK at the moment. So firstly, just going to my point about international students, this has been the real core headline-making debate in the last few months since the pandemic hit, especially in countries like the US, UK and Australia that rely on international students. And here you can see that depending on the drop in overall student numbers, you're looking at quite substantial sums of money that could be lost to universities in those countries. And clearly the US stands to lose billions of dollars, really, if you actually lost quite a number of international students, and 40% is really probably the top end of what anyone might expect and probably is unrealistic, but it's still a huge amount of money. And you can see that the UK comes in second there as potentially being hit. But the important thing is it's really not just about international fees. And this IFS report this week, it really highlighted how there are other financial concerns that we need to worry about in the UK sector. A major one here, and I think this is an interesting graph because it shows the range of scenarios the IFS was talking about in terms of how universities could be hit. I mean, they were saying that the most pessimistic scenario, the sector was looking at losses of around 19 billion, but in an optimistic scenario, it's around 3 billion. So quite a wide range of different possibilities there. And it's hard to sort of chart a way through, but I think what that shows really is that the uncertainty around international students, but also how much pensions here and pension deficits could impact universities as well, because that is the main determinant there of the different size of the losses. It's very important to remind everybody that we're not just talking about one sector as a whole in the UK. There are so many different types of universities, so many different types of provider. And what really came home from the IFS analysis was that although perhaps the most research intensive universities that tend to be the most highly ranked are those that will lose the most money in terms of international students, they are also the ones best placed to weather the storm. Really, they have a lot of financial reserves, and they stand to make a lot of money from students anyway. The net income is normally quite high, so that will offset what happens. And it's really other universities that weren't in such a good financial position that may be at greatest risk. And I think another important thing to emphasize here is it's not all about the pandemic. Universities had a whole host of concerns before this even happened, Brexit being one of the major ones. And as you can see from this graph, a lot of institutions in the UK, they already relied quite heavily on income from European Union sources. So that's either really fees from other European students coming here, or research grants from the EU, which is an area which is still very uncertain in terms of how the UK will participate in that. And also it's already been announced that EU students or students from EU countries will have to pay the same fees as international students from the end next year and won't have access to loans anymore, which could affect the number of students coming here. But another thing I really want to get onto discussing later on in the webinar is generally just the financial long-term sustainability of universities in the UK. For quite a long time now, we have relied on essentially one main funding model. We do not fund research properly. There is a shortfall in the real cost of funding research, and we make up that difference really through surpluses on other activity, quite possibly mainly international students, which is why there is such a worry about the present time. And this graph here, essentially, it's from a HEPI report from 2 or 3 years ago. So the data is are a little old, but it basically shows that research-intensive universities, it varies, but they often spend a lot more on research than comes in terms of the income for that, and the shortfall is made up from other areas. So hopefully that gives you an idea of some of the major themes I'd like to discuss over the next hour. I should add at this point that everyone watching has the opportunity to submit their own questions through the Q&A button that should be at the bottom of your Zoom screen. I can't guarantee that we'll definitely be able to answer a particular question, but hopefully I can include as many as possible. If you see me looking to my left, then that's just because I'm checking questions that are coming in and trying to select some good ones. Also, don't forget to follow the debate on Twitter through the hashtag #THEInConversation. And with that in mind, I'd like to turn to our panelists. And I think I wanted to start really, by looking at quite a specific point, because it's the one that's made the news most often in terms of university finances. And that's how income could be devastated if lots of international students either delay their study here next year, choose to defer come next year, or if they cancel their plans entirely. And whether that is a long-term trend, are we going to see more of a shift to regional study, where a lot of students from countries like China choose to study regionally and stay in the region, go to other parts of that area like Singapore or Hong Kong and not come to the UK, or could we bounce back quite quickly? And if I could sort of turn to you, Jeanne, first, just because Moody's has done some excellent analysis generally on the risks faced by universities as soon as the pandemic hit. How bad do you think the hit to income from international students delaying or deferring or cancelling their study plans is going to be? And is that really a long-term problem, or is that something that we'll fix? We'll in a year's time, we'll look back and think, well, that wasn't really an issue.
I'm not going to make a definitive statement as to what the impact on international students will be. Like others that you've highlighted, we've chosen to look at this across a number of scenarios. So 3 scenarios as well for anyone who's read the paper that we've done. The first 2 scenarios we view as more probable, and in those scenarios we have a fall in international students of 10 or 20% for next year only. And I never thought that as Moody's we would be the more optimistic party, but we generally view UK higher education as quite resilient. Now, we do rate only 9 universities. Generally, they're in the Russell Group, so perhaps in the higher tier that we've talked about. But under those scenarios of a fall of 10 or 20%, we think that the impact will be quite manageable. Now, that assumes that there isn't a larger drop. That also assumes that this is a one-year issue. And we have the benefit at Moody's of a global higher education team. So we have ratings in the US, Australia, Canada, and we speak regularly to our colleagues in other countries. Of course, the market for international students is a very competitive one. It's also a global one. I think that the UK has some strengths which we expect to continue. So the first point is that international student applications for this year, I believe we're at an 8-year high. So prior to the pandemic, demand was very strong for UK higher education. Secondly, we've seen a more supportive policy environment in the UK than we have seen in some competitor countries. Particularly in the US, where visas have been removed. And then we had the news, I think it was yesterday, that students with online courses may face deportation. That matters. 25% of the world's international students go to the US. And we know from surveys that what international students care about is the quality of the education and that it's a welcoming environment. And what we saw through the Brexit process was the resilience of the reputation of the UK. We initially put the sector on a negative outlook because we thought international students would be put off. You know, that didn't happen. We saw that resilience, and we think that that will continue. So if our more probable scenarios come true, we think that this will be a manageable risk and limited to next year. But let's see.
Yeah, well, that's excellent to get that perspective from you there. And I think it's a very interesting point about the way different countries are positioning themselves and how they might be seen by international students. That has developed quite a lot over the last couple of months, with the UK now starting to look at ways to bring in international students through charter flights and that kind of thing. But the US seemingly actively making the situation kind of worse in some ways, arguably. But yeah, I think it's an interesting point. Alec, if I could just turn to you as a vice-chancellor and how you see this in terms of international students and whether this is really, is it a major issue? Do you think it's been overblown? Do you think that actually we'll be surprised and see numbers actually holding up quite well?
Firstly, I think, Simon, with regard to international students, you're correct in identifying that as being the greatest risk. There are other dimensions of risk we can talk about in terms of home student enrolments, and a lot of talk there about deferrals. We can talk about commercial activities, and there are risks in those areas, but the biggest risk is international students. I agree completely with Jeanne in the sense that the demand is still there. The universities are, let me say, still have healthy pipelines of applicants. If the scenario that Jeanne paints turns out to be the case, it will be a very, let me say, happy and relieved sector. I can say that my institution and the institution I'm talking to are anticipating a much greater fall than 10 to 20% against plan for international students in the coming year. Not because the applicants aren't there, but because we are aware in some sense of the Gaokao examinations in China have just started, they've been deferred. English language testing officers haven't been available, visa officers haven't been available. There is a long and complicated process for international students to turn up in September. And we believe, as I said, despite the best intentions of universities and students at the moment, to be honest, I would be surprised if universities are not planning on, let me say, a 50% performance against target for the coming year. I do think that scale of shortfall is probably a one-year artefact. I think the interesting thing is what happens after the first year. Do we return to whatever normal is, or do, in some sense, is there a long-standing impact on what was previously a very healthy growth trajectory? In other words, is the market in the future going to be 20% less than it was in the past, or whatever? So my sense is, as I said, I'd be very pleased if Jeanne is right and I'm wrong. But what we are looking at the moment is, and I'm not seeing that as pessimistic, but most of the universities that I'm speaking to, up a range of sort of 20% total fall in revenue, not 20% on international students, 20% in terms of total revenue shortfall next year, down to probably some in the 10% type range. So, that's the scale, I think, and that represents a much greater, let me say, than 10 to 20% shortfall on international students. That's the impact on that international shortfall on the greater university revenue. And
longer term, you mentioned that it is interesting, this idea of whether things will stay in that particular, when they'll never go back to the kind of the high levels of demand we were seeing before. What could universities do now to kind of plan further ahead for that? What do you think they should be doing?
Look, I think it's two things, Simon. I mean, I think what we need to do in some sense is get back up and running as quickly as possible. And once again, there is a tension there. I mean, you talked earlier about the competitiveness of the UK sector. It is a very competitive sector internationally at the moment. As Jeanne mentioned, the US is not making itself more attractive to prospective students from some of the target recruitment countries. On the other hand, to be frank, I think there's a balance. We're obviously keen to get students back up as quickly as possible. At the same time, I think, a legacy the UK has at the moment, to be frank, is that it's not perceived internationally as having done a great job in terms of managing the health impacts of COVID. So we need to be careful in terms of not being too enthusiastic to bring in students with, let me say, very low barriers. And I know, one thing that the sector is, in some sense, unenthusiastic about is quarantine. But once again, I think one of the things that we're battling against is, let's say, parents of Chinese students who are wary about what they perceive to be a lack of sufficient attention in some sense to the health management issues around this virus. So I think that's the tension for us. I think we've got a very attractive offer. We almost don't want to be seen to be too easy to get into, because that undermines the let me say, the quality of our offering in terms of the health and welfare issue for students.
And there's a question that's already come in here from the audience on this issue, which is perfect to throw in here. And we've mentioned it already, Jeanne mentioned it. The announcement yesterday in the US about online students that are online and not being able to stay in the country, does something like that, do you think that benefits the UK though, really? Do you think the UK, although there is concerns about how we have dealt with the virus, that the US is almost so unattractive as a destination that we will benefit?
Well, once again, I mean, the US is no more attractive in terms of how it's dealt with the virus. So, I think the competitive countries in that regard are more likely to be Australia and Canada if parents are concerned, let me say, about the health issue and the prevalence of the virus. Look, I think what we have benefited from is very positive government response on this matter. So we previously would have had a situation where there was a visa requirement for international students to have a certain level of attendance on their program to maintain their standing for their visa. Thankfully, the Home Office has, under the current circumstances, relaxed that requirement, which means that if students come here, but the mode of delivery is primarily online in the first instance, that is not in contravention of their visa. So this is, once again, I suppose, almost direct contrast with the US, a very supportive government policy in terms of removing what otherwise would have been challenging for us, particularly in a circumstance where in September, I think most universities will be offering a blend of online and on-campus experience, but cognizant of the fact that if there was another outbreak or a cluster in one area, that might require a university or the whole sector to revert to what we were doing in April. So we don't want to be in a situation there we have a problem with students in some sense being not acting in accord with their visa requirements, which is that they're required to attend on campus. So I do think that's just a signal, a very positive signal about the government being on side with international higher education.
Thanks very much, Alec. If I could just bring in Ian quickly on this as well, speaking from outside the sector, looking in almost. Do you, and the financial situation, do you think international students is as major a risk as it's made out to be? Do you think we really worry about that too much, and there are other things we should not take our eye off?
No, I don't think we overly worry about it at all. I think it's a very real risk, and the sector are normally a very prudent sector in terms of financial modelling. So that should continue, and that's what universities are doing. The 20% down to 80% drop in international income is a common theme when you look at financial forecasts, but that's on the basis of prudence, and that universities' finance directors have to look at their worst case scenario because they need to have finance in place to be able to account for that potential drop. That doesn't necessarily mean that is going to happen. That means universities have finance and contingency in place if that were to happen. So there's a big difference there. In terms of what we're actually seeing in terms of student enrolments, acceptances, applications, the numbers so far are all looking relatively positive, as Alec says. Numbers in terms of applicants are up. Accommodation bookings, which is potentially a more reliable measure at the moment, are up, they're not significantly down as people feared. But what it does mean is that there is a glimmer of hope. But until you actually, as an institution, have those students enroll and have those actually either on campus or working from a digital model, then universities are uncertain, and they have to put finance in place. They have to look at cost cutting to make sure that they are a financially sustainable model going forward. That looks at everything from delaying CapEx, which is a delay, it's not a cancellation. It is looking at redundancies. It is looking at other cost saving measures where you might say it's cutting the fat across an institution, making it a leaner model going forward. So absolutely, it is a huge area that needs to be focused on, but then it is one that sits alongside various other risks that, again, Alec alluded to, that there are pension concerns across the sector in terms of cost. There are other costs that universities need to be focused on. There will be a view of turning back towards looking at more sustainable models going forward. And I say sustainable as in long term, but also green sustainability. There will be a focus on diversity and inclusion and disadvantaged backgrounds, and making sure that your course offering, your estate, your online provision, your university experience for your students are all there. Because normally in an economic downturn, you have an increase in people looking to upskill and gain an additional qualification. Normally in an economic downturn, you don't have an impact on your actual provision or your experience. This time you do, with social distancing and online models. So there are costs, there are concerns, and universities have to be alert to all of them. You can't just focus on the main risk, which is international students.
Yeah, now that's, I do want to get on to exploring quite in a lot of detail what universities should be thinking about in terms of they need to save money, what they should be looking at, how to kind of go about that. One thing before I get to that particular topic, while we're on international students, the other side of this, of course, is domestic students as well. And the government moved, obviously, to reintroduce a cap there, where a lot of universities may have been thinking that they could make up the shortfall in international student numbers or income from domestic students. Then the cap has made that picture a bit more complicated. Rachel, if I could just ask you to come in on that, from the HEPI's point of view, do you think the cap was a sensible idea to stabilise the sector? Do you think it really will help the right universities in the current situation?
So I saw Joe Johnson yesterday say that he was concerned about the cap and the potential for the cap to stay in place for longer. And I think I would say that I share his concerns about that. I suppose part of the issue is the fact that the cap is designed to stabilise the sector, but it's quite broad, the kind of extra 5% and the potential drop in EU students, meaning that more UK students could be included within that. So I worry that the cap doesn't do enough to stabilise the sector necessarily, but could also have a sort of play into the government's plans in all the rhetoric we've seen in the last couple of weeks about whether universities are really serving students and whether, students are getting the most out of higher education. Even before the crisis, it sounded like some of this stuff was going to come back. And I know we were concerned about the idea of a numbers cap coming in. So I suppose I remain concerned about the idea of that cap being maintained and whether the sector asking for it for this year might play into the government's hands in that way.
And how much do you think the cap was not just a tool to kind of stabilise the sector in the short term, and how much do you think the government is eyeing this as a way to kind of push forward some of its agenda in terms of obviously it has moved in the direction of trying to say recently that not all courses are valuable, and look at using Leo data or graduate earnings data to single that out. Do you think it's part of a wider policy agenda from the government?
I can't see how it's not really. There's been so much conversation about low value courses, and I suppose looking at particular courses could be a way of introducing a cap. There's various different ways that caps could come in. And so I think it kind of fits in with that wider message. And my concern is that we're about to see that demographic change. So this is the last year that we've got the kind of low number of 18-year-olds in the population. We predicted that we'd need another 300,000 places in HE by 2030. If there's a cap that stays in place longer term, then who isn't getting access to higher education? We've got some really challenging access targets from the Office for Students. Will they still be able to be met if there's a cap in place? So I suppose it's not necessarily the case that because there's been a cap in place for this year, that means it's going to continue to exist. And I think there are complexities about how that would operate. But I think it's something we should be aware of and ensure that in everything that we're doing in the response to the current crisis, we're both thinking about the immediate, like 2020 academic year, and also the kind of longer term picture for HE.
Yeah, and I think that's something I wanted to come to again later as well, in terms of the opportunities that the HE sector has really to, if there's an economic downturn, to be there as the kind of, there are universities out there that are very in a prime position to help really, you would say, in terms of reskilling. So that's something I wanted to come to later. The other thing I just wanted to explore in terms of income, we looked at domestic students, we looked at international students, and perhaps I could bring Andrew in here, being the CFO. What other, maybe you could talk a bit about pensions here, what other income challenges or financial considerations should we be thinking about really in terms of universities over the coming months and years? What's going to actually, there's lots of universities that have financial reserves, but if they start using those reserves, does that put them in cause a problem further down the line in terms of investment, for instance?
So two factors there. Firstly, it certainly puts a premium on diversification of income streams, spreading risks, and those who've put all of their eggs in one basket, either by design or by default, may well be feeling very uncomfortable today. Of course, a lot of our income, such as catering, conferences and residences, the underlying income stream is student dependent. So there's clearly a symbiotic relationship there, and relatively few universities who perhaps might be geographically located in great places have greater opportunities to earn conference income and other types of income from those sources than perhaps others who don't have those geographical benefits. So London, for instance, or parts of the Midlands and so on. I think it also puts an emphasis on a diversification of income streams from the countries from which you're recruiting your students. China is clearly a major source of students, and I suppose one of the factors that worries me about China, although haven't they done incredibly well in terms of their approach to controlling and containing COVID, but we're now potentially exposed to geopolitical risks with Hong Kong and China, and how is that going to pan out over the coming 12 months? So that's something we needed, like a hole in the head. And many of us, most institutions probably been talking about trying to diversify income streams, be more commercial, more industrial funding for research, looking at alternative markets for recruiting students, but actually it's incredibly difficult to achieve in practice. Sometimes it requires huge sums of investments, unless you're getting into partnership with other universities or other providers. That is potentially a great way of diversifying. It's not necessarily a cheap option, and it's not a quick option either. Building local presence and partnerships takes time to establish, to recruit, and to build your brand. So other income streams absolutely do have a part to play in terms of diversification, but it's a relatively small part of our income. At least for most universities. But one thing I think that this crisis will definitely do is we'll focus our minds on our business model. You talked about the teaching research, but there's also that diversification and alternative income streams. And it may well effectively, we won't go back to business as usual. COVID will end up turbocharging attitudes, approaches, abilities. There is a counterpoint to that, in that governing bodies and maybe management teams will also be much more risk averse in the future than they have been in the past, because our cash balances have been depleted. We're exposed to this pandemic risk, and look, just going back to the conversation about international students, and we're all worrying about, is it going to be a 20% or a 40% or 50% reduction in the autumn? But it's not over in the autumn, is it? As Alec kind of alluded to, if there are local lockdowns, if there are, if something blows up in another country, if we're not able to deliver the online or blended learning student experience that we all hope to deliver in terms of a high quality experience, are there going to be pressures for fee compensation or funds, or is there even going to be pressure on tuition fee ticket prices anyway? So I think we're going to have income uncertainty throughout the whole year. And that uncertainty, I think, could fuel a bit of risk aversion in governing bodies and maybe management teams. Not necessarily a bad thing, or is it? But that will, it's going to be, I think it's going to be quite difficult for universities to do quick, ambitious, scalable things in the short term.
Just to throw another question in there quickly, off the back of that, you talked about the sticker price. It's something that surprises me, just as I suppose might surprise people that aren't familiar with the sector, is that there doesn't seem to have been a change in, say, the fee level for international students broadly. Is that something that you think will come more into play, or why hasn't that been explored really in the short term?
I think in large part that's because universities see tuition fees pricing as partly their mark of quality. So AIM will protect their sticker price, but will discount through offering scholarships and discounts, and find alternative ways of other financial inducements to students to effectively make the net cost, which is, I think, a very sound strategy. Whether that can be maintained if we end up having to deliver a substantial online experience, that may be significantly out of line with students' expectations, remains to be seen. I do think one thing universities, in my view, and I shouldn't make these sweeping judgments, but I'm prone to them, universities, I think, aren't very good at pricing, come what may, partly because we operate in strange markets. International markets are deregulated. It is a genuine international marketplace. But I think we've come to the pricing, our pricing strategies probably aren't the most sophisticated. And that's an area where universities need to improve as well, because, I can't help feeling in some instances we're actually underpricing ourselves in some of our markets, and there's more opportunities.
Thanks. And Alec, if I could just bring you in on that as well as a vice-chancellor, how do you see that? Do you see the fee levels for international students, and especially now that EU students are kind of part of that as well, changing quite a lot in the not too distant future?
Well, I suppose I'd say three things about pricing. One is what Andrew said, which is, higher education, the student in some sense, or the prospective student, trying to evaluate an institution, prices their best proxy for quality, or that's their perception. In some sense, higher price aligns with greater prestige, and that's the way pricing is in the market at the moment. The most prestigious universities internationally are able to charge a premium price, and there is some correlation between pricing and ranking internationally. So that's one consideration. The second consideration, to be honest, is the model that we have moved to as universities does not come at reduced cost to the universities. So the sense that in some sense, we're sitting on some unspent, let me say, revenue that we can give back to students. The reality, it's costing us more in the short term to deliver what we will be delivering in September than it would have cost us last year. So in some sense, to the extent that students expect that the fees they pay can be represented in terms of the money spent on their education, we've probably got a stronger position at the moment in terms of saying, look at all the investment we're making to provide higher quality online and smaller group teaching exercises. And the third thing, to be honest, it's a competitive pricing market. So universities, in some sense, students are priced, in some sense, many of the providers are almost price takers in the market rather than price setters in the market. So the idea, in some sense, that a university will gain advantage individually by reducing their price. In many cases, the experience in higher education has been reduction in price has led to a reduction in demand. So we just need to not, in some sense, assume that natural, let me say, competitive pricing behaviour behaves the same way in higher education, which in many ways behaves more as a luxury good in terms of pricing behaviour.
Sure, and I think it is worth remembering that how complex it's not straightforward supply and demand picture sometimes when it comes to university courses. If I could just sort of turn now to looking at, if there is a substantial hit to income, what universities should do really in the short term, medium term, to try and kind of shore up finances. Where should they look for savings? And I've already written quite a lot in the last couple of months about whether temporary staff are the ones that are often worrying about that they're going to lose their jobs. Should we look for savings other than staff to make sure the quality is maintained? Ian, if I could bring you in here just to talk about that really, how do you think universities should approach cost saving?
Well, I think the people and staff point is an extremely important one, because everyone obviously cares about their own job. These are fundamentally people businesses, institutions that if you cut too many people, then your long-term sustainability could be impacted. So whilst we have a short-term challenge, albeit a big one, it is short-term, and any institution that is looking longer term, which all should be, need to focus on a long-term strategy, not just how to survive COVID and the impacts. One thing that Simon mentioned was around research and income diversity. The more income diversity you have, the more opportunities you have for potentially cutting cost. But likewise, we shouldn't paint the sector with the whole brush. There are very different institutions, and income diversity isn't necessarily a strength for everyone. You take some very strong domestic focused, teaching focused institutions that are sitting in probably quite a pretty picture at the moment, or something better than their counterparts, because they may be impacted less. But then again, if they look at cost savings, then they can't simply just take out people from that. A big source of investment across the whole sector has been estate strategy. And that is again a short-term delay of funding, because the states will continue to be invested in, and if you can delay that funding or that spend, but it's going to be fundamental to success and sustainability going forward. So again, there are areas there that can be cut. There are cost savings through people. There are voluntary redundancy schemes that can be cut, and savings saved in various different places. I think a lot of institutions, if we use the term carrying excess fat as the right term, that institutions can become a lot leaner. They can take views from corporates. I think we have got in the sector a lot more people with corporate backgrounds working in finance teams who do take a red pen to a lot of unnecessary cost. I think a fundamental change in provision at some institutions, again, they have the need, maybe more so than others, to have a look at inside their own institution and look at where those costs are, and actually which courses are making money, which ones aren't, where your cost centres are, and look at a more granular a cost analysis to see what is viable going forward.
And Jeanne, if I could just ask you for your perspective, again, looking from the sort of financial picture from outside the sector, is that a kind of, is there an obvious thing the university should be doing really in terms of trying to make cost savings?
Well, I think from the Moody's perspective, the way that we think about the sector generally is quite strong balance sheets, so very low levels of debt, stable demand, but not as efficient as other sectors. So Andrew touched on revenue flexibility, trying to diversify revenues where you can. You know, one of the constraints of the sector is that there is less expenditure flexibility than there is in some other sectors. So I don't expect the sector to make drastic cuts. I don't think there are a lot that can be made in the respect of that others have already talked about, that if this is a short-term problem, you don't want to make things more difficult for yourself a few years down the line. One of the areas that universities that I've talked to have discussed is something that every sector and every office is discussing, is how are we working and how do we want to change the way that we work, perhaps more on the administrative side of the university. So the ones that I talked to have said that perhaps they're more traditional in their approach to working in this regard, a little bit behind the curve on remote working. And this has, as for most companies, catapulted us into the future. And universities are asking questions around the density of their buildings. Do they need this many staff? Do they need all the staff on site? So I think there could be some longer term cost savings to be had in terms of the way that universities are working, the same as for other sectors. And then the ones that we've seen which have got higher margins, which are more profitable, do take that more strategic approach that Ian discussed. So often centralizing costs rather than decentralizing down to departments to have stronger oversight, challenging, more internal challenge around costs, not just rolling over budgets every year. So I'd say a more strategic, perhaps even more control over the costs that need to continue, but then maybe some longer term gains around ways of working.
And another obvious question that comes up here is, do you think we're going to see a lot of mergers, possibly with the FE sector as well? Sorry, I'm asking that to you again, Jeanne, just to...
Mergers, I don't know. Again, we covered 9. They tend to be more in the top tier. We don't expect, most of ours are rated in the AA space. So we wouldn't expect any of them to be in need of assistance that would result in a merger. Could there be mergers? Yes, of course there could. We recognize that it's not going to, the impact isn't going to fall evenly across the sector. So there could be instances. but we don't expect them for the ones that we cover.
Thanks. And just staying on the kind of cost saving point, Rachel, if I could just bring you in here, and administration has been raised there. Do you think we've reached the point where universities are spending too much on administration and we're going to need to see cost savings there? Or do you think universities can really look for savings in other areas that we maybe haven't mentioned?
I think it's challenging, and I think one of the things that the IFS report this week really sort of brought home to me was how different the approach will be in different universities, and how differently impacted different universities are. I suppose one thing that I think we should probably bring into the picture when we're talking about where cuts should be made is we always ask in our HEPI Advanced HE Student Academic Experience Survey, we ask students where the most reasonable spend of their tuition fees is. And interestingly, they, perhaps unsurprisingly, most support goes for the kind of areas around teaching. They also are supportive of campus development and those kind of things. Less support for things like student recruitment, the kind of civic role, investing in the local community and raising the university's profile. So I don't think that should be the whole of the way that we look at where cuts can be made, but I do think the students' view should kind of come into that picture when we talk about where cuts could be made. But yeah, I think it will be challenging for universities. There was already a kind of challenging financial picture for universities before all of this happened, and then this has just been kind of blown out the water by that. So,
and just staying with you, Rachel, there, just to talk about the government support that, if I could talk about ways that the sector could be supported. The IFS report actually talked about how support maybe should be really targeted at those universities that will require it, and actually don't need to spend that much money to actually make sure that the universities that are in financial dire straits get help. Whereas the UK has proposed a much bigger kind of bailout, if you like, of several billion pounds. Do you think, what should we be thinking of in terms of government support here? Is it quite conspicuous by its kind of absence, apart from specific schemes that have been mentioned so far, in terms of, yeah, that they've announced research support, for instance, but there hasn't been an all-encompassing kind of bailout, really?
Yeah, I think I'm not really surprised by the approach that's been taken, partly because although universities are going to be hit hard by this crisis, they are going to be hit over a longer period of time, I think, than many other sectors. So there was an immediate response from government. It got some fair criticism for being kind of a rejig of existing money anyway. But I think it's perhaps unsurprising when we still don't know exactly what the picture's going to look like in September in terms of international student numbers, home student numbers. So much is uncertain. So I think it's good that we saw something come, the kind of research report come after the first government announcement, which showed that actually there is some sort of level of responsiveness. But I would imagine the support is going to be more targeted at individual institutions. And I think that does kind of raise the question about, bailouts for specific institutions and whether that goes against the existing kind of pre-existing rhetoric about whether the government would let a university fall over and go bust. And that's something that there was a very clear message from Michael Barber at one point. I still don't think that they would let that happen. I do think that targeted support will come if it's needed, but I'm not sure that we'll see a kind of catch-all programme for the sector, at least now. Perhaps further down the line, when we know more about how things are going to play out, that might come.
Sure. And Alec, if I could just bring you in on this as well, what do you think the government's approach should be, really, in terms of support for the sector?
Look, I'm not anticipating a bailout as such. I think the opportunities for us will be twofold. I do think what we want from government in some sense is support to get the universities up and running again in terms of removing barriers and impediments for us to get on and get back to our sound business models. So, in some sense, we are constrained from doing that at the moment through some of the restrictions that are in place, and they've been in place for good reasons for health considerations. But the sooner the universities can get up and running again, the sooner we can get international students coming back to our campuses, the business model for universities remains sound. And the best antidote in some sense is to remove the impediments to the university business model being up and operational again. I do think the second opportunity, as I said, and I think this won't come with the badging of bailout, it will come with the badging of economic regrowth and regeneration within regions, which means that some of the government funding to get the economy going again, I think will find its way into universities as part of the economic drivers within towns and regions and cities in the country. So, now, that's probably just a question in some sense of how funding gets badged, but I think a lot of the regeneration activities that the government will be looking to put in place to get the economy generally up and running will lead to some funding for universities as part of the solution to economic regeneration within regions. So I suppose I'm saying, don't look for the word bailout, look for other funding opportunities for universities, increased spending on R&D, increased spending on strength in places funding and other opportunities. Where, as I said, I think there will be opportunities for universities to play an important role in economic regeneration.
I think it's also important just to chip in and state that it's any bailout, any restructuring regime, student protection plans aren't tested across the sector. They haven't been. Any government intervention to bail out a specific institution will have to have some form of strategically important teaching element, a regional economic importance if an area is well served by other institutions, and there is I suppose government rhetoric at the moment around low quality courses, then that will raise concerns for some institutions, and there will be a debate about whether the government will allow a university to fail or not. But I do see the government supporting institutions to make sure that actually local economies are protected. These are hugely important civic institutions to communities. They are hugely important to local economy and local job market. So I think the institutions that need support, providing they are done in the right way, will have some form of support from government. And you can't simply close a university down. You have a 3-year flow through in most cases of students. So any financial instability will need if there is going to be a closure, it's an orderly exit, and it's an orderly movement of students. You cannot simply close the doors and fail to open.
No, just while you're there, Ian, talking about that government support, which what other kind of support could universities turn to really financially if the government doesn't help them in particular? I mean, where can they find some sources of funding? And obviously, speaking the point of view of a bank, you'll know exactly what might be there. But presumably, it isn't just government support that they could rely on.
No, there's a mix. So universities, and I think Alec just mentioned that the government Rachel maybe mentioned that the government didn't respond straight away to the university call. Other sectors had less cash and more immediate impact. So there is liquidity in the sector. There is access to finance. And again, this goes back to an earlier point I mentioned, that you can't treat all universities the same. So you have those institutions that are clearly investment grade. They have access to the government funding schemes, albeit that's working through slowly in terms of the CCFS scheme, CL bills, so the Coronavirus Loan Business Interruption Scheme for the acronyms. So you have those funding sources available, but again, they are repayable and they have a short-term tenor. CCFF, especially with 12 months, so you have a finance, a governance and audit challenge in terms of going concerns, sign-offs. And so it's not simply let's access government schemes and be done with an issue, we'll refinance it and repay it. There is therefore an ongoing viability concerns. So you need to look at other funding sources as well. So there is the bank market available. There is naturally challenges there with student numbers not confirmed until September or October time, and then January for a January intake, which gives uncertainty on cash flows and financing, or the ability to access finance and prove affordability. The same, and Jeanne may have a view on this from an investor's perspective, those institutions that can access debt capital markets, you've got large pension funds looking at investing, again, they are probably going to start opening their doors to the right type of institution for their investment. Where there is a strong balance sheet, they will look at supporting that type of institution again. But again, they are likely to want to see what student numbers in September look like. We've mentioned throughout that student numbers are a key impact, and they are a key income stream. So that will predicate a lot of financing. But the sector as a whole has always been a strong credit from a bank perspective, but also from investors, and that's proven through the ratings that the likes of Moody's give out to the sector. So there is access to finance. It's just a timing challenge and the nuance of waiting for September in a lot of cases. That said, we are currently looking at financing institutions, both existing clients and new clients to us, where they have a liquidity requirement and a cash flow need that an existing lender can't support, maybe through size of request or current facilities. So there are lots of nuances. It's all on a case-by-case basis, naturally, because each institution is different. There are some institutions that simply do not need any finance at the moment. They don't envisage huge drops in income. There are other institutions that the IFS highlight as having more challenging financials, and they're the ones that may struggle to raise finance, because at the end of the day, you need to have line of sight into repayment and affordability to refinance that in the future.
And if I could just weave in a question that we've had, actually, this might be a little bit technical, but it seems to be along the same lines as what you're talking there. But so Julian Jones asks, what's the appetite from finance providers to support universities with long-term debt in the form of business sustainability loans? So something spread over 15 to 25 years. Many universities have the capacity to take on further debt, but the pensions contribution makes this difficult. So is that something that you think is realistic?
I think the days of long-dated bank finance are probably gone. They wouldn't. Tenors of borrowing was reducing pre-COVID, or were reducing pre-COVID. The sector doesn't normally look at term facilities. So for those who aren't bank-minded, a long-term committed mortgage that you repay over time isn't necessarily the way the sector to finances itself. It's more a revolving credit facility. You then have to look at the cost of capital to a bank, how much that costs, and the pricing that a university would have to pay in terms of interest cost for a long-term commitment from a bank isn't what the sector like, isn't what they're used to, and isn't really viable. A shorter-term committed facility from a bank is where the market is now. Longer-term investment for a capital project, a state master plan, a state development, is from an institutional investor, private placements and debt capital markets. The days of long-dated bank facilities are probably over, especially in the current environment where we're looking at short-term facilities, because actually, if you look at a short-term facility now, you're going to be likely, hopefully, in a better position when you know your student numbers. So why would you lock yourself into a more expensive facility now for a longer tenor when you can look at a shorter term facility and then look in a longer term when you are in a better credit position post September?
Well, thanks for answering that question sort of directly. It does seem that there were more kind of those sort of long-term loans around when I was covering the sector about 10 years ago. But Andrew, can I just turn to you quickly and ask, in terms of financial support, other than governmental financial support, what do you think should be out there, could help universities?
Well, first of all, I should say that people like Ian and his counterparts at all of the banks, and I've spent probably since that lockdown far too many meetings, speaking to bankers and investors as well. They've all been incredibly supportive of the sector, which I think partly reflects their partly they're looking after their relationship and making sure that they're going to get their money back, but they're also, I think, genuinely see the UK sector as a long-term good bet and are interested in knowing what's going on and genuinely want to support us. So it's generally, at the moment, a very positive, supportive approach we're seeing from all the banks. So that should mean that along with the government schemes that Ian mentioned, we shouldn't have, universities shouldn't have too much difficulty getting short-term liquidity support if they need it. And we shouldn't be looking at long-term borrowing for short-term income losses anyway. Long-term borrowing should be supporting long-term sustainable business plans. Other forms, well, gosh, it's harder, isn't it? We've opened up the market to a marketized higher education system, which is highly dependent on international tuition fees and largely, not exclusively, public sector funding of research as well through the various bodies. Although all of those, all of that research funding is something for something. And similarly with philanthropy. I mean, interestingly, since COVID, our philanthropic income has been going up, largely focused on COVID-related research and on student hardship, which is brilliant, fantastic, and that's what university and the universities are about. But largely, it's in and out. It doesn't actually provide general support for our activities. So finding other forms of support, well, basically, you've got to earn it or borrow it, and getting that balance right. It takes us sort of back to square one in terms of our business model, our income diversification. And alternative sources of income, which you can't just switch on. There's no quick instant fix to those.
Well, I think we've explored the kind of financial angle quite well there. Just with about 15 minutes left, if I could talk about reasons to be optimistic. We've had a few questions here that have come in, and they probably all sit in this area, but really it's about how can the sector kind of change its not just business model, but the kind of students that it's looking to draw in and educate in what could be quite a difficult financial time coming up. And I'll just read up a couple of these questions just so I've included them. But it says here, this is from Sean Bracken. This seems like a perfect storm for internationalisation. Brexit, Chinese politics, COVID all seem to place significant barriers in the way of international recruitment. With a longer term pool more likely to be home focused, how can universities change accordingly? And obviously we had the demographic shift coming in that at the moment. It's schools that we're trying to look for this boom generation. We're looking for places for them. That's going to reach universities in about 10 years. Rachel, if I could ask you first, do universities have an opportunity here actually to completely fundamentally, not all universities, of course, research intensive universities to a large extent, they're all about kind of making sure that their research is funded a lot of the time. But are the universities, does the sector have a chance here to refocus what it does?
Yeah, I think the first thing I would say, since you mentioned China, I have to get in a plug that we've got a report coming out tomorrow about the relationship between UK and China in terms of higher education. So that's worth a read. I think there is an opportunity, perhaps not for a fundamental shift, but we know that from some of the UCAS data, and I think there's more UCAS data coming out tomorrow, and the student finance data, that domestic numbers are in a positive compared to previous years, at least as high. And more people often choose to enter higher education in times of recession and stay on to higher education for postgraduate study, and kind of there's an opportunity for universities, I think, in terms of how we reskill people who are going through difficult economic times, and universities to really demonstrate all the work that they're doing already. I know I've seen a lot of work being done in recent years by universities in terms of the focus, the links between kind of the learning that they give and also the employability aspect. And obviously Aston's a particularly good example of that. So there's already a huge amount of work that's kind of gone into that, and I think there's an opportunity for universities to continue to show, to demonstrate kind of the benefits that they can bring as we move out of this, or we move kind of through this crisis.
Do you think the government should force their hands in some ways, some universities, to kind of refocus what they do and not so become so reliant on international students, or do you think that will naturally happen because that will be the only way they can survive?
So I don't think it should necessarily be one over the other. I think we get brilliant benefits in the UK from international students coming to study here. Obviously, it's going to be a much more challenging time for that to happen. So I think it's about kind of both aspects, both seeing how longer term we can ensure that international students want to come back and study here when things are a little more stable. We saw Boris Johnson bring in the post-study work visa, or bring back the post-study work visa, those kind of things to show that we're welcome to international students, but also showing the domestic benefit that can be brought about by the higher education sector. I think we actually strengthen the sector by talking about both of these different aspects, and that alongside all of the benefits brought about by the research aspects as well. So I think there's kind of opportunities that way. I suppose the other aspect is, although there's likely to be a longer term detrimental impact of the fact that EU students are going to be charged higher fees, we may see more EU students coming to study here this year, potentially, if there's kind of more certainty about where we are with COVID by September, if they're trying to come in before those fees go up. So I think there are reasons for cautious optimism and about how the UK HE sector can pitch itself going forward. But yes,
and just to, yeah, no, that's and I think I can definitely see how that you can view the situation that way. And Alec, if I could just ask you as well to comment on that, because you mentioned before, look, as long as universities are given the opportunity to bring in international students, then the model is there, that it works. But looking at that graph in my last slide, for a long time now, the UK sector has really been not funding research properly. Do you see that changing with the 2.4% target that the government's now, was committed to, hopefully still is? Do you think that will, if research is funded properly, then maybe we don't need to worry about international fee income quite so much?
Look, I do think that's part of the answer, Simon. I do think, in terms of, personally, my view is what needs to change most in terms of the funding of UK higher education is, in some sense, removing the, to be quite frank, explicit cross-subsidy which is required from international students to sustain significant research activity at the moment. I think if we get to a point which says actually there's closer to or full funding of research activity, then in some sense, don't get me wrong, I agree completely with Rachel. There is a benefit from having international students on our campuses, right? It adds to the educational experience of our students. We don't want to be in a position, which some people would claim we might be at the moment, where the primary reason for international students is to provide a cross-subsidy to support the research activity in the UK. So I do think in some sense we need to move ourselves away from the argument that says, government is obliged to in some sense support international students because that's the mechanism by which research is supported. My view is no, support research properly and directly. Then we make the right strategic decision as to what is the right balance of international students in the UK system to enhance the education experience of UK students, to aid soft diplomacy for the UK in terms of bringing people to this country, to fulfil our international obligations with regard to aid and support, to leverage a capability within the UK, which is its extremely strong international position with regard to higher education, but not as a means to cross-subsidise research. I think that's the challenge with the current funding model, and I think that's the bit that needs to be fixed.
And Jeanne, if I could just bring you in on this as well, given you have that international perspective about how obviously the UK model of using fee income from international students to subsidise as a cross subsidy for other activity that isn't just unique to the UK and is in other countries as well. Do you see that changing in the longer term? Do you think it needs to change really in terms of university sustainability?
I think it is a challenge. You're right to say that it's not unique to the UK. I was reading an article recently about what's happening in Australia, and they're having the exact same discussions. So I think that delinking research and international students in terms of the subsidy would be positive for the UK. I think decreasing what is a financial reliance on international students would reduce the pressure and the risks associated with international students that we're seeing now, those challenges. So I agree that would be a positive development. And also the concentration risk with individual countries, which has already been raised, which universities will be well versed in that challenge. Most universities have been trying to move away from concentration with one or two international countries from where they're recruiting. I would say some more successfully than others, but I think that's the other area that could change, that would benefit the sector and put it less at risk than it currently is.
We've only got a couple of minutes left. Andrew, if I just ask you a specific question that came in, I've tried to weave in some of the questions that have come in during the hour. And I thought I saw you putting your finger in the air as well to say you wanted to add something, but I'll give you a chance to add that. But somebody, Alistair Moffat here, said, could a government bailout actually be to allow undergraduate tuition fees to rise by inflation, or do you think that's politically impossible?
Yeah, look, so I'm in my office today, first time in 3 months, and next to me is my whiteboard, and I keep a track of to constantly remind myself when the £9,000 tuition fee came in England 8 years ago in 2012. Obviously went up by £250 in 2017. Actually, that's I'm going to link that to the previous discussion we've had about does the government need to change our funding model? And I think, the great thing about events like COVID, please don't quote me on that. The opportunities for events like COVID, disruptive events, is they perhaps reveal things that not many people or not everybody understood. And I think the sector has really struggled to explain to ministers and senior civil servants how UK higher education finances fit together. The cross-subsidy, the relationship between teaching and research. And that's enabled them to do things like freeze the 9K fee for 8 years. We're just about to enter the 9th year. There's a real and genuine cost to that now, because essentially we've had to absorb, we've still been subject to cost inflation on our pay bills, whether it's pay awards, increments, pensions, national insurance, the apprenticeship levy, I go on. So cost inflation on salaries have been going up year on year on year, and universities have magically been able to absorb that, and they've absorbed it by growing other income streams, principally international fees. That's not a sustainable model. And similarly, what the recently announced research intervention package from the government is actually aimed at compensating universities for lost international fee income, but only up to their level of non-publicly funded research. So for the first time, we've seen an explicit link from policymakers between international fee income and research. So they understand the penny has dropped, that to be completely reductive about it, for dramatic effect, that Chinese students are effectively funding British science. That is not a sustainable model. That has to change. We cannot carry on a kind of linear line. So this disruptive event, I hope we have to use this as an opportunity to persuade policy makers to think again. Maybe the 9K fee is part of it. I think actually, I think it is a political step that's too far, and that's not going to happen. They will. I think they're going to take a very different approach to future sector regulation and sizing and shaping of the future. We promised a white paper in the autumn. It was a year ago in May, we had the Auger report commissioned by Theresa May, and we've all been waiting for the government's response to that. Well, Theresa May's come and gone, and we've now got Dominic Cummings and Boris, and we may get a very different response with some elements of the Augur report and their own colour on it. So I think we are going to have a very interesting and different future from the past. I wouldn't hold out much for the 9K fee going at Alistair.
Well, thanks. That was a perfect kind of summing up sentence of the position politically and financially that the sector finds itself in now. So I'm afraid I have to wrap up. The hour has flown by, or hour and a quarter, if you include my introduction at the beginning. Apologies for any questions and issues we didn't manage to cover. And it just leaves me to say thanks to all the panelists. It's been a delight to have you discuss the issues today. I hope I gave everyone a fair shout in terms of speaking, and I think everyone made an excellent contribution. And thanks to everybody for tuning in. I hope it's been interesting. Can I encourage everyone to look out for more online THE events? Details can be found on the events section of our website, which is at timeshighereducation.com/events. And in particular,